being joined by Parthiv Jhonsa, who is the lead analyst, metal and mining at Anand Rathi. Hi Parthiv, very good afternoon. This is Shrishti, and thank you so much for your time, first of all. But Parthiv, the sector of the day indeed is the metal counter because it's the China Index CSI 1000 that's up 10% today, and even back home, metal stocks are shining bright. Wanted to understand that how sustainable this move could be. What's your confidence on this particular move? Because Parthiv, there's been a lot of news flow around the China reopening, and in the past as well, Indian markets have been reactive to that. But how this time could be different? Your take on this?
Hi. Thank you for having me. Good afternoon. Okay, so let us first deep dive what has actually happened over last, especially post-COVID, right? Like you rightly mentioned, that once China started opening up, right? This is not the first time that China has given out stimulus. In the past, they had given out stimulus which were like a multiple in a piecemeal manner, I would say. What used to happen in past that whenever China used to give out stimulus, especially catering to say the real estate sector, the stocks or the prices of metal used to rally in anticipation of that stimulus. I have always been telling that China requires a big bang stimulus in order for things to move. This time around, I feel that after almost 3-4 years, they have taken steps in the right direction. It is not only the monetary but also the fiscal stimulus what they have given. One of the major stimulus, what actually I believe is might change things around is the fiscal, especially for the job creation and for upliftment of a certain sector of the society, right? What they have done is a very good initiative, especially just before their week-long holiday, which is just supposed to start this week, right? Also, yesterday where it came that three of the largest real estate cities, which is Shanghai, Shenzhen, and Guangzhou, they are actually relaxing a lot of rules, right? With no restrictions, especially in a couple of cities. So that is expected to not just help the first-time real estate buyer, but also the second and the third home buyers as well. So this all would combine. I believe that this time around, what used to happen in the past, especially in the after 2008, 2015, whatever stimulus recently, they were not able to give that kind of a positive output like back in the days, right? However, this time around, let's wait and watch. It's still too preliminary to comment on that, but this at least this stimulus has been a step in the right direction, I would say. So if you see, all the prices have actually rallied. And the prices have kept sustaining over last 1 week also, whether it be iron ore, copper, for that matter, even aluminium or even your carbon steel, right? So all the prices have kept on sustaining at least over last 1 week.
Well, yes, there has been a substantial recovery, like for a lot of these metal counters. But Parthiv, which commodity are you most bullish on? Because steel, aluminium, copper, they are seeing good moves, but it's the iron ore prices for today that have seen the major rebound. So, which commodity do you believe that could do best in the times ahead?
All right, so let us do one thing. Let us first break this into ferrous and non-ferrous, right? When you talk about iron ore, right, when it comes to the ferrous pack, right, what used to happen that the port level, anyways, the inventory is still quite high. It is 146 million ton plus in China. It is the renewed, I would say, optimism which has uplifted the prices, and it has crossed about $100 odd. I've been telling this that I believe that in this year the prices can remain between 95 to $115 for iron ore, and that has been the range which has which the prices have been trading in for as far as iron ore is concerned. Though there is a renewed optimism, there is also the thing that all the global miners are also enhancing their production, right? So that will also in post this holiday season, it might have some impact on the prices, but this price is a good price where the mills also can are able to maintain their spreads if the steel prices go up. Now what has happened is in China, your ferrous, especially the long steel and the wire rod, the inventory has gone down substantially over last 2 to 3 weeks. The HRC is not, the inventory has not reduced to a great extent. What happens before the long holiday season, there is a lot of construction or outdoor construction activity which picks up. So that is the reason why the long steel inventory has gone down in China, and that is a good I would say that's a good view going forward. As far as the copper and aluminum is concerned, the copper inventory has also reduced substantially in China compared to aluminum. That is the reason, if you see, also there is a lot of copper ore crunch also. So this price, I always say the price of around 9,500 in copper is a very good price to work. As far as your aluminum is concerned, a price over a certain say about 2,600, 2,650, it becomes unaffordable because aluminum is the second largest usable commodity, and with its application across say automobile or a new age sector, a price over a certain becomes a bit of an unaffordable. So the current price of 2,600 is a very good level, I would say, where the smelters can definitely make some money.
All right, but with this, we'll let you go. And thank you so much for joining us and taking the time out and helping with your take on the metal packs and what actually is panning out in this particular sector. Thank you so much for that.
Thank you for having me.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.